Ladies and gentlemen, good day and welcome to the Share India Securities Q2 FY24 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sohail Halai from Antique Stock Broking. Thank you and over to you, sir.
Thank you, Deo. Good evening, everyone, and we welcome you all to the call. We have with us the entire management team of Share India Securities Limited, represented by Mr. Kamlesh Shah, Managing Director, Mr. Rajesh Gupta, Director, Mr. Sachin Gupta, CEO, along with other senior members from the management team. I would also like to thank Mr. Kamlesh sir and the team for giving us this opportunity to host the call. And now, without further ado, I shall hand over the call to Mr. Kamlesh Shah for his opening remarks. Over to you, sir.
Thank you, Mr. Sohail. Good evening, everyone. Welcome to Share India earnings call to discuss the results of Q2 of financial year 2024. I wish you all a very happy festive season. It will be fair to say that for quarter 2 financial year 2024, results of Share India are not less than a festival. Share India is delivering best results in the industry for past 3 years. More than the exceptional performance, we have been able to develop sustainable business model that is able to perform in all market conditions. Continuing our legacy for performance, Share India has recorded quarter 2 as best quarter in the history of Share India. I am happy to present the key highlights of the operational and financial performance of Q2. First, we will deal with the consolidated number. Total revenue quarter-on-quarter basis increased by 32% from 279 crores to 368 crore, an increase of 53% on year-on-year basis from 243 crore to 368 crore. Profit after tax quarter-on-quarter basis increased by 37% from 82 crore to 113 crore, an increase of 56% year-on-year basis from 72 crore to 113 crore. The EPS for the quarter works out to 34 rupees 50 paisa. Net worth also has reached to 1,218 crore. The consolidated results show all around development in the business verticals with 30% contribution to the consolidated profit by subsidiaries is a step towards diversification and business sustainability. Now, when we look at the standalone figures, it will give even a better picture. Total revenue on quarter-on-quarter basis increased by 33% from 208 crore to 276 crore and increase of 59% year-on-year basis from 174 crore to 276 crores. Profit after tax on standalone basis has increased quarter-on-quarter basis by 56% from 51 crore to 80 crore and 77% increase on year-on-year basis from 45 crore last year to 80 crore this year. The standalone earning per share works out to 24 rupees 35 paisa. Net worth has reached 986 crore on standalone basis. During the quarter, we recorded highest ever EBITDA and net profit margin. The board has approved second interim dividend of rupees 3 per share. Think Algo, Think Share India is the theme behind our future business strategy. During the quarter, we had successfully rolled out launch of U-Trade Algo, a product designed to empower retail investors with advantage of Algo. Technology is a key growth driver, and after successful integration of two large tech companies, that is AlgoWire and U-Trade, we have recently finalized acquisition of Silverleaf Technology to give boost to our HFT and disruptive strategy-based trading platform. We are poised to meet with our expansion plan with strengthened network base, building on successful right issue of over 800 crore along with internal accruals. We are in process to equip best in the industry professionals on our board of directors and management team for seamless execution of our plans. We are ready to shift gears for our global operations, mainly from GIFT City and at subsidiary in Singapore. We see new set of opportunity in international operations with Nifty being actively traded from GIFT City. Going forward, we will focus on technology, consolidation, retail penetration through algos, overseas trading, merchant banking, and expanding our institutional business. I thank you all for joining this call today. May God bless us all. With these thoughts, I would like to hand over proceeding to Sachin ji to share plans going forward. Thank you very much.
Yeah, good afternoon, everyone. Thanks a lot, Kamlesh sir, for the detailed presentation about the current results and the future vision. So I thanks everyone for attending this call. As Kamlesh sir explained, last quarter was the best quarter in the history of Share India, and I just want to thank all the investors for having faith in our journey and in Share India. Without their help, we may not have achieved this kind of growth or maybe these numbers. So I just want to ensure that from the side of entire team that we all are fully motivated to work hard in future to achieve more higher goals and try to encash the current scenario where participation is growing and we all are seeing good growth in broking industry. So I just want to say that we are seeing a major change that all the brokers, broking companies are being seen as a different sector. It has come up as a new sector. So like all our competitors, all our friends, other companies are also showing good results. Along with that, it is also beneficial for Share India. And secondly, recently we saw a S&P report where they have projected that by 2030, India will be the third largest economy in the world. India should be the 7.5 trillion economy by 2030. So we believe that if India is ready for this kind of change, this kind of shift in gears, so we are well positioned, having large tech partners with us, and all verticals are set. Our goal is that Share India should be all-weather company. With the help of tech, with the help of current verticals, we believe that we'll get major benefit in the coming next 6 years, as projected by S&P. Share India can also be one of the biggest beneficiary of this growth. We just expect the kind of confidence and faith investors have showed in us. They will continue to do so, and Share India is pledged to work hard and showing good results in coming future. That's it from my side. We can proceed further.
Thank you, Kamlesh sir and Sachin sir, for your opening remarks. apart from Kamlesh sir and Sachin sir, we have other members from the management team. I'll just like to take a brief moment to introduce all of them. We have Mr. Rajesh Gupta, Director, Mr. Abhinav Gupta, President, Suresh Arora, Director, Mr. Kunal, Director, U-Trade, Piyush, Director, Silverleaf, and Mr. Ajay Patel, CEO, Share India Insurance Broker. With this, we'll request Rayo to open up the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, you may press star and 1. The first question is from the line of Gaurav Fushe, who's an individual investor. Please go ahead. Okay, Gaurav's line seems to be on hold. We'll move to the next question. The next question is from the line of Deepa Goyal, who's an individual investor. Please go ahead.
Share India has been continuously showing good growth numbers. What is your expectation for future trajectory?
Thanks for asking this question, ma'am. Ma'am, as I explained that we are seeing that India is going through a big change, in like economy is growing fast and change in the behavior of the investors, and we can see the long-term investors or traders are there to stay for the longer period. So Share India is definitely going to get big benefit out of it, and we believe that in next 5 years we should grow by the CAGR of 25 to 30%. At least for the next 5 years. That's what we are expecting, and we all are working for it.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rahul Arukandadil from Vista Investment. Please go ahead.
Hi, good evening, sirs, and congratulations for the good results. Typically, what we have seen about the broking industry as such is that it's been a cyclical industry. However, we're also seeing that there's been a surge in the options volume lately, and every time someone says that it's peaked, what I find is that the options just keeps on going and going. So you have like a 5% market share in this options market. What is the trend that you have been seeing, sir, lately? We know that, okay, I'll make my question a bit more specific. So we know that the cash volumes kind of go down in times when the market isn't doing well. But how have you seen the options data pan out during times of volatility over the last few years, sir?
Kamlesh sir, you want to answer this question?
Yeah, I will start and say complement it. The main reason is, now we have almost like daily settlement from Monday to Friday. And intraday business has grown by multifold. The option volume accounts for about 90% of the total volume. So going forward with the new products being offered by the regulator and the reforms that have been played by the regulator has put in a lot of confidence into investors. Second thing, there are new sets of investors who have joined the market, and they are tech savvy. So, their participation in F&O also has been useful to grow the business. So we feel that with the new product, new opportunity, the volume in options will go up, and it will provide a lot of opportunity to the retail investor as well as the traders. Also, going forward, we see possibility of extension of market hours beyond 3:30. There could be an evening session from 6 to 9, for which permission has been sought by NSE from the regulator. So all these factors put together will have substantial activity going on. Along with the volatility in the market, the volumes will remain good and there will be better opportunity.
I would like to add something here. So as Sir has explained, there a lot of innovation is happening on the exchanges side, and they are providing new products to trade, like daily expiry of some or other index, and it is the main reason behind the surge in option volume. One more thing, we have Mr. Suresh Oda with us. He is expert in commodity trading and all. We are seeing a lot of innovation on commodity side from NSE, BSE, even from MCX side, and volumes are also going up. Sureshji, if you can please put some words from your side about the growth in commodity business by all the exchanges.
One moment. Yes, Mr. Suresh, you may go ahead.
Am I audible?
Yes, sir. Please go
Yeah, you're audible. Yes. Okay. So let me first explain about our status right now in the executive control in the option side or commodity side. We are already having a very good team to deal in commodities and all the points. We have around 4 to 5% market share in MCX and as well as NCDEX market. Other we can have we are having around 10% market share in NCDEX market. But as you all are aware, one thing is commodity market is far bigger than the equity market. And as the regulator has opened the FPI and all other and many reforms, we are seeing option market and commodity market increasing more and getting more and more volumes and more attraction from the retail side. So as you all are aware that we have option expertise and a lot of technology side advantage with us. So we are seeing very good attraction in this commodity segment in the coming time. And both exchanges, like the big exchanges, BSE and NSE, are coming with their new contracts and new innovative products to deal with. So we are seeing a very good attraction. As we all know, market is very volatile and we are seeing a very good attraction in this. So as far as the volume is concerned or our strategy is concerned, we see as soon as FPI will get more and more attractive to this market and the retail participation are more attractive to this market. With our expert knowledge and with our expert and good teams, we can have good command in this all segment, commodity segment.
So one follow-up question to that. So basically, what I wanted to know is markets have been pretty good for retail investor over the last 7-8 years, barring the last month. So have you seen increase in option trading activity in choppy times versus normal times? Is that true, or am I just assuming that?
Yeah, option are always a better tool to hedge, better tool to trade in the choppy times, as you all aware. Rather than the future or underlying contract, options are always better. So we see option volume will increase, and particularly I can say in commodities, as you see the Israel and Philistine war and the geopolitical tensions and all these things, we are seeing good volumes and good volatility. And whenever there is a good volatility or increase in volatility, the options are the best tool to trade.
Okay, my last question, sir, is with regard to your subscription model, UAlgo. Could you tell me a bit more about it, like how much percentage of your revenues came from UAlgo in this quarter, and how do you see this panning out over the next few quarters or years, or how long you can tell me? That's all from my side. Thank you.
Yeah, I will just start, and then Kunal Nandwani, he's director and CEO of UTrade. He will take it further. I just want to explain that we have launched a product around 2 months back, and we have it was a soft launch only for our existing clients, and we have more than 1,600 clients, and right now more than 200 clients are trading on regular basis. So we haven't started with the marketing tools and all, which we are planning to do so from the 1st of January. So because we were waiting for the feedback and the right changes required in the product before we are going full throttle to the industry. And about the subscription 3 years vision, I think Kunal Nandwani can take over and explain about the product and the vision of the company on this particular product.
So I'm sorry, just one question. I think I'm a bit unclear. But this UAlgo, it's not only for Share India securities holders, but any broker can use it, like in the future. Is that what you're trying to say?
Not yet. It is only for Share India and Share India clients. But in future, if you get good, see, the idea is the more the product is popular with the other intermediaries, it's easy to sell, or if the product is more accepted in the masses. But right now, we haven't even thought about sharing the product with the competitors. So again, Kunal will explain about this in detail. Kunal Nandwani, can you please take over?
Sure. Am I audible?
Yeah, you're audible.
Hi. Okay. So I'll just reiterate a few things Sachin has said, and then I'll try to address your question. Firstly, we launched this a few months ago. We did internal testing, live testing with our clients, traders, and then we slowly started opening up to the rest of the market. And we've not yet started full-on sales and marketing efforts that we are going to start in the next couple of months, as Sachin has just said. We've seen just by people being interested and trying to use the platform, more than 10,000 signups for the platform for early access, and many of them are regularly using and periodically using. But the main sales and marketing effort starts in the next couple of months, and then we'll see how that goes. Our target broad vision is, number one, trying to address your question first. Initially, we are going with a very deep algo and broker integration with Share India, with an offering that will be truly unique and highly differentiated in the market. And we believe the deeper integration brings a lot of value to the customer. As an example, the risk checks at algo level and order level, margin checks, proper multi-leg trading, etc., is done better if the broker and the algo platforms are deeply linked, which is not the case in the market as of now with any other alternates that are out there. So we have gone with that. That deeper integration has taken us some time, and now we are ready to release the product to the market. Initial plan is to go with Share India plus U-Trade as a combined offering to the Share India broker customers only. So whoever wants U-Trade algos will come to Share India and open a demat account there. It's not unheard of that people have multiple demat accounts for different reasons. They may go at one broker for mutual funds, one broker for equities, one broker for options, and maybe for algos and option algos, they come to U-Trade algos plus Share India. And then in time, maybe they experience the other products with us. But that is the thought process so far, though we are open to how the future evolves. Initially, we are going with a deeper U-Trade algos and Share India integration only. Our broad vision target remains that within the next 3 years, we want to have at least 2 lakh paid subscribers. That is a broad high-level target we are working towards. Rest the time and the markets will tell. That's a quick answer to your question.
Yeah, but is this only for options, or is algo also for cash?
So it is a multi-asset platform. Initially, because the most of the trading demand and algo usage and relevance of that is in options, so we have initially optimized our product and performance for options and futures and mainly derivatives algos. But we have equities available, we have commodities available, and many more assets and exchanges would come soon. But initially, the focus has been options. Very soon, you would be able to trade equities via algos as well. It will be multi-asset, completely multi-asset, multi-exchange.
Perfect. Then I think I'll try UAlgo at some time. Thank you for answering my questions patiently, gentlemen, and all the best to you and the team.
So, thank you.
Thank you. The next question is from the line of Sarvesh Mutta from Antique Stock Broking. Please go ahead.
Hello, sir. So my question was regarding average daily turnover. So when we last saw markets peaked in October 2021, and the ADTO peaked out in the next quarter in Q4, and we still haven't reached that level again, even though Nifty has already crossed those levels. So how much of these ADTOs do you think are market linked?
Okay. Again, I will start And I would like, am I audible?
Yes, sir.
Yeah. So I would like Abhinav to take this question, but I will just, give it a start. So I tell you one thing, ADTO is not only market linked, ADTO is also, linked with many other factors like lot size. So recently exchange has reduced the lot size. So, a client is used to trade in number of lots. They don't see quantity exactly. So lot size has been reduced by 40%. So ADTO, that's also one of the fundamental reasons why ADTOs are not able to catch up those levels. Secondly, option premium has gone down. Another reason, so people are not able to trade so frequently, which they were able to trade, and some other reasons also. So about your question, Abhinav, can you please take over?
I'll just so you are absolutely right when you say that the ADTO sort of peaked out. But if you recall our earlier con calls as well, we have been continuously maintaining that we are focusing on strategies which are low turnover based and higher productivity based. Fact of the same can be viewed from our PAT margin and the bottom line percentage output as well. So we have been very clear that we want to focus on the strategies which elementarily don't rely on the turnover business, but also has a certain amount of productivity attached to them. And hence, having said that, we have been able to maintain our market share at around 5%. Going forward, we do believe as new products do come into the play, we would be at the right place and be able to expand our market share in those new products. But as of right now, we believe that in the current setup, the ADTOs will stabilize at the current numbers.
Abhinav, can you also elaborate about change in ADTOs in especially in commodity side?
So ADTO for the specifically for Share India has been continuously increasing. Exchange data, as Mr. Suresh sir and has already explained, it's still a very niche market that is there in terms of the overall scheme of things. For us, currently MCX and NCDX combined do around 2,000 crores of an ADTO in an 11,400 crores ADTO of the overall company. Going forward, we do believe commodity would be a very big element. But as of right now, because MCX, NCDX and both NSEs are coming with new products on a daily basis, so that's when we would start seeing them a material impact in the ADTO numbers from these segments as well.
Okay. My next question would be when you had elaborated that you could see timing increases for the exchanges. Okay, so even if it goes to say 5 p.m., do you have any data wherein how are the volumes spread out throughout the day, whether they are like very heavy at market open and market close, and would that be a similar case even if the timing increases, so that the increase in volumes won't be that much even if market timings increase?
So I'll just start with that. Sachin sir and Kamlesh sir can add on to it. So honestly speaking, we do have international references where there are expiries where there are market timings which are more than 8 hours a day. But having said that, we are still waiting for the clarity to come from exchange on what kind of the behavior market is expected to take, whether there will be two settlement in a single day, what kind of product would be available in the second half in case the second half trading comes in. And this is that we would be able to have a reasonable assumption. But before that, it would be just a shot in the dark from our end.
Okay. Kamlesh sir, if you want to add something.
Yeah. See, it is not about the volume. It is about the opportunity being made available to the investors. To participate in the market, because many investors do have a regular job or the business. So many of them are not being able to participate in the market during the market. So that is one thing. Second thing, the market is highly volatile in view of the interest rate events. So here, Indian resident investor had no other choice but to bear the brunt. So now, with the extended market hours, at least they will be able to hedge their position and protect their portfolio. And going forward, this will also helps, as it is commodity market is working up to 12 midnight. So equity derivatives in the evening may add value to certain investors. The second thing is the evening session would get merged with the next day's settlement. So that also will reduce the concern about the settlement of the settlement part of it. So it would be easier, and we will see how it works. This is first time this kind of experiment is proposed. So let's see, how it works. If it works well, then some more segment could be added, or the market hours could be extended. As it is, as per the SEBI guideline, we have permission up to 11:55 in the night for derivative and equity market. For derivative market, sorry.
Okay.
Thank you.
So within say commodities, you must be having a volume split wherein how much volume is there for morning session and how much is there in evening session, and if equity derivatives are also started in the evening session, would that cannibalize your commodity trading?
The commodity trading happens mainly in the international commodities. So the commodity trading will happen only in the evening, that is after 6 o'clock, when European market is open and the US market is opening. So, I mean, this cannot be compared, one to one with the equity market.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Ananya Swaminathan from Cogent Finvest. Please go ahead.
Hello. Congratulations on good set of numbers, sir.
Thank you, ma'am. Thank you very much, ma'am.
So our share of subsidiary companies have been increasing continuously in consolidated entity. Could you please highlight breakup of various divisions in overall numbers?
Abhinav, can you do so, please?
Yes, sir. I'll just start, and then Mr. Kamlesh can add on to it. So currently we do a PAT of around 112 crores in the consolidated entity, of which standalone does around 80 crores. Around 13 crores would be coming from the NBFC division, and remaining would be primarily based in Share India Algo Plus. And a small amount would be coming from merchant banking and insurance broking divisions. I would just add Kamlesh will add on to it anything if that's further required.
Yeah. From a business sustainability point of view, we thought that our presence should be there in all the business verticals in the financial services part. So we have about 11 subsidiaries which contribute to the business of the Share India, and all of these have started in last 2 to 3 years. So the growth has been phenomenal, and luckily, with the growth of the market and with the kind of management bandwidth we have been able to develop all these segments and the subsidiaries very well, and each of the subsidiary is putting positive contribution for the consolidated account. As Mr. Abhinav told you, around 30% of the profit is contributed by the subsidiaries, which is a healthy number. And going forward, there will be a lot of value creation also coming out of these subsidiaries, as all these subsidiaries are eligible for listing once they have matured business profile. Thank you.
I would like to add one thing. We have Mr. Rajesh Gupta with us. He's heading our NBFC business, and NBFC is showing really good growth in the last couple of years. And we have very ambitious plan especially for the NBFC division in next 3 to 5 years. And Mr. Rajesh Gupta can also explain about some NBFC business and where we are focusing. And according to him, where we see the same division in next 3 years.
Okay, got it. So, Share India has been continuously showing good growth numbers. What is your expectation for future?
Ma'am, as I explained earlier, we believe that within the current scenario, the way India is growing, the way overall economy is growing, and especially stock market participation is getting matured, and we have different verticals like NBFC, insurance, merchant banking, some tech companies. We believe that with the help of all these new things, we should achieve 25 to 30%. This is just an expectation, 25 to 30% CAGR for next 5 years.
Okay. Okay, sir. And one more question. Recently, BSE has been in news for Sensex expiry. Did it have any impact on our business?
Yeah, it has a positive impact on the business. Volumes are growing up, and a lot of clients have started trading in BSE, and going further, Sensex will be one of the good products in the industry. So this kind of innovations and BSE coming in is healthy for the overall industry. So we believe it will be very positive for us.
One last question.
Madam, sorry to interrupt, but this also offers better utilization of your working capital. Because normally on Friday, the market used to be dull. With the introduction of Sensex on Friday and Bankex on Monday, there will be additional volumes, and we'll be able to generate better revenue out of the capital deployed by us. Thank you.
Okay. Okay, sir. And one last question. Could you please share an update on insurance broking subsidiary? What are current business matrices and what are your future plans?
Yeah, we have Mr. Ajay Patel, our CEO, with us. Ajay, if you can please answer this question.
Business, we are about 3.5, 4 years old.
Your voice is not clear. Can you be louder, please?
Okay. Am I audible now? Is this better? Yes.
Yeah.
So we've been operating in the market for about 3.5, 4 years. Our focus again has been in terms of providing an end-to-end solution to our customers in terms of all types of insurance. So be it commercial, be it retail, we are there. In terms of product mix, if I have to say, our commercial insurance, which typically comprises of our asset insurance, comprises about 23% of our total book. Employee benefits is about 18%, life insurance is about 22%, marine is about 17%. So if you see, about 70% of our book is more of a sustainable business, renewed, wherein we will have a very high persistency. Motor insurance, typically wherein we see high turnover, that's just about 10% of our total book. So the kind of book which we have developed over a period of time is something wherein we have long-term relationship with the client, and that would enable us to, one, strengthen the book, at the same time show our expertise in terms of the claims, because our focus is more in terms of claim settlement rather than focusing in terms of the premium per se. So that's one strategy. The second strategy also is in terms of focusing on the tier 3, tier 4 markets. So we have gone into small pockets which have got some heavy industries, and we have seen some sizable amount of success in the last couple of years, and we would continue to do so. That's the broad-based strategy for us. Simultaneously, we are also developing our digital platform, which is Policy Square. We already have some of the products which are there. We are working very closely with the tech team in terms of developing AI, because probably in the next 4 or 5 years of time, you will see a sea change in terms of the way insurance is being marketed in the country and across the world. So for that, those investments have already started off, and you will see that we would be among the leaders in terms of distribution of insurance products. Thank you, ma'am.
Okay. Thank you, sir. That's it from my side. All the very best.
Thank you, ma'am.
Thank you. The next question is from the line of Tanmay from PCR Capital. Please go ahead. Tanmay from PCR Capital, you may go ahead with the question.
Hello, am I audible?
Yeah, you're audible, sir.
My question was for Rajesh, sir. What is the current book size of Share India FinCap?
Good evening, everyone. Current book size of current book size of Share India FinCap is 200 crore.
Okay, sir. And also, can you give a brief number about the total branches, customers, and NPS of NBFC?
Okay. We have at present 55 branches spread over 5 states, Punjab, Haryana, UP, Bihar, and recently we have added Madhya Pradesh. Total of number of customers as on 30th September was 67,200, and NPA are very low. It is to the tune of 0.75% only, which are quite healthy as in comparison to the other NPAs.
Okay, sir. So my second question was, company recently merged with Silver Leaf. Can you please give a brief profile of Silver Leaf? What kind of strategies does the merger drive?
So I just give you the basic start, and we have Mr. Piyush Kedia with us from the Silver Leaf. He can explain the future plans. So as Kamlesh sir explained earlier, Share India management has a vision of making it a all-weather company, and as we all know, stock market business is considered to be very volatile, but we just want to make it a more sustainable business. And that's why we are, focusing on different verticals, not concentrating on one set of vertical only. So like U-Trade is looking after the retail piece of the company, insurance, NBFC, you have just talked to Mr. Rajesh sir. And same vision we were having for international business. So Silver Leaf is they are expert in HFT trading basically in India right now. So they will bring in the HFT tech stack with them, and Share India will soon start, once the formalities are done, soon start HFT business in India. We'll try to expand our base. Secondly, vision is next 5 years, we should be trading in multiple international exchanges with the same tech stack. And it will give us more sustainability and different revenue stream to the company. So that's the whole goal of, acquiring that particular company. And Mr. Piyush Kedia is one of the founders of Silver Leaf. He's with us. Piyush, if you can please explain about Silver Leaf and the future plans. Mr. Piyush Kedia, Piyush, are you there?
Yeah, hi. Am I audible?
Yeah, you are audible now. Yeah.
Okay. So at Silverleaf, our team makes use of statistical methods to backtest on historical data, and we come up with high-frequency trading strategies. With this acquisition, the synergies that are created, that we see getting created are, so one, our existing operations scale up. We get access to more trading capital. Share India being a much bigger organization, we get to scale up currently the strategies that we're running currently. Our backtesting technology with Share India's trading powers will combine to create more value than individually we are doing right now. Being a small entity for us right now, we get operating leverage right now because as a small entity, we like, say for example, opening up a new exchange for us is a lot of effort. But on Share India's platform, new exchanges and geographies, international geographies can all be added much faster. And then lastly, talent acquisition. We see that with Share India's size and our technology, we'll be able to add top-notch talent under our platform and scale up much faster using that talent.
I hope that answers your question, sir.
Yeah, sure. My last question was that will the acquisition also help in company's international expansion?
Yes, sir. As I explained, as you also elaborated, that the kind of tech they have, it was very difficult for Silverleaf alone to expand to the international exchanges, and same goes with the Share India. So combining together, Silverleaf coming into our fold, so we believe that our joint strength is that our financial strength, our legal strength, and their tech stack, combining both things, we are focusing to expand our business to different exchanges, international exchanges. In next 5 years, you will see that Share India will be operating in multiple international exchanges. So that's the primarily goal, doing HFT strategies in India and international also.
Great, sir. Thank you so much for answering my question.
A pleasure, sir.
Thank you. Before we take the next question, in order that the management is able to address questions from all participants in the conference, we request participants to please limit your questions to one per participant. Should you have a follow-up question, we request you to rejoin the queue. We take this question from the line of Akshada Deo from Vivog Commercial Limited. Please go ahead.
Hello. Hi, am I audible?
Yes, ma'am, you are audible.
Yeah, okay, thank you. Congratulations on a very good set of numbers. So what I wanted to know was, you have 1,400 crores of cash on your balance sheet right now. Are you having any plans for using the same?
Sorry, Avinash, can you please answer this?
Yeah, so ma'am, as you understand that we are a financial company, so most of the cash that you see from a broking entity comes from the client reserves, which is essentially people who have deposited money with us in order to trade with exchange. So as of right now, our net worth is around, consolidated net worth is around 1,200 crores. And right now there is no plan to use cash because that's all being used for the operational activities.
I add something more so that you get better clarity. Here, we are required to place margin with the exchange, and for placing margin, we are required to deposit 50% our contribution. That is the margin to be provided by the broker. So for availing 100 rupees of facility, we require to place 50 rupees of margin. So the cash which you can see are all placed either with the banks or with the clearing corporation, so that we get better leverage, and we get bank guarantee and intraday facility, which help us to expand our business activity and to take care of our intraday requirement as well as the end of the day requirement. Thank you.
Thank you. The next question is from the line of Raj Tater from X. Please go ahead.
Hello. Yeah. Most of the online brokerage companies, their main source of revenue is fees income or commission income, whereas at Share India, our main source of revenue that I see in the P&L is the net gain on fair value changes. What does it mean?
Avinash, please answer this.
Yeah. So, as we have already been saying that we do have a proprietary trading arm within the company Ambit, and that's where we specialized earlier. It is now that we have expanded into multiple ultra HNI, FPI, and other institutional size retail categories. So that proprietary trading element in terms of revenue constitutes around 70% of the revenue. In terms of bottom line, that constitutes around 50% of the bottom line.
Thank you. The next question is from the line of Vikas Jain, who's an individual investor. Please go ahead.
Congratulations, sir, for good set of numbers. I'm audible, sir?
Yes, sir. Yes, sir. We can hear you.
Sir, my question is, what is the current level of debt in the company?
The current level of debt, okay, though. So we have facilities in terms of bank guarantees and intraday facilities from the bank. Cash debt, if you consider the parent company or the group, it should not be more than 175 crores. That includes some, deposits from the loan from the directors also. Apart from directors, we are not having more than 100 crores of debt in the company. Abhinav, can you please, do you want to elaborate?
Yeah, in case, I mean, that's a requirement. So, as I said, we are a financial company. So, as Sir has already explained, we do have banking limits in terms of guarantees, and as on date, there might be certain bank guarantees or OD facilities that might be open, and hence you might be able to see a number on the balance sheet. Overall scenario, as we have already declared to exchange, the most of the debt capital that we have should not be more than 100 capitals, excluding the entire promoter funding and any other current payable to the extent of the client deposit that are with us in our balance sheet.
Thank you. The next question is from the line of Abhishek from Shree Capital. Please go ahead.
Hello. Yes. Sir, my question is our company is continuously doing acquisition to strengthen the tech stack. What is your view on consolidation in broking industry? Are there any plan in current pipeline?
Kamlesh, do you want to answer this?
Yeah, I mean, this is a continuous process. We grow organically and inorganically both. Because we require different talent for different business verticals, and to acquire specific talent, the one which we just before some time discussed about Silverleaf. So likewise, we get a lot of opportunities, and considering the size of the business and the volume and the business platform that we have available, it makes sense for us to acquire a company. For last 4-5 years, there is a trend of consolidation in the industry. Now the definition of beautiful has changed, that big is beautiful, because big firms will have a lot of advantage in terms of technology, the financial capability, and the management bandwidth. So all this requires a larger organization, and acquisition in many cases works to the advantage, whereby from day one we can start getting benefit of the new stream of business. So this will be a continuous process, and as I explained to you, we will grow organically as well as inorganically. Thank you.
Thank you. The next question is from the line of Bhavik, who's an individual investor. Please go ahead.
Hello. Yeah, congratulations, sir, for a really good set of numbers. So my question is regarding the launch of U-Trade application. So currently, I believe that we've launched a web application. So do you have any plans to even launch a mobile application so that we can reach out to the larger audience? Because the current format limits the usage.
Kunal, you want to answer it?
Yeah. So, hi, am I audible?
Yes, sir. Yes, sir.
Okay. Yeah. So the mobile app is coming later in November. So you will have the both iOS and Android apps, and you would be able to use them to create, subscribe, deploy algos, and do a variety of things, everything possible. So they're coming in November. The apps are coming.
So I just want to add one thing. So U-Trade Algos is a very innovative platform. So we are adding a lot of things, like you said, rightly you said, it's only on web. App is coming in a month's time. And U-Trade team is tirelessly working day and night to make it more customer friendly and user friendly product. And you will see next 2-3 months, it will be a far better product than what it was launched. And upgrading a product based on the feedback of the customer is a continuous process. And U-Trade has a bandwidth of, take that kind of challenge and keep on upgrading the product in the coming time. So we believe that this particular product will be one of its kind in India, and it can change the way people trade or way people do algo trading in India.
Thank you very much. We'll have to take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Yeah. Hi, this is Abhinav. Thanks a lot, everyone, for attending the call. Hope to see you soon the next quarter. Yeah. Thank you.
Thank you very much.
Yes, sir.
Yeah. Kamlesh sir, any comments from your side?
No, thank you. I mean, for attending in large number, and thank you for your trust and confidence in the management of Share India. We will try to do our best and emerge as a unique fintech company in the industry. Thank you.
Thank you, everyone.
Thank you, Kamlesh, sir. Thank you, Kamlesh and the team for giving us this opportunity to host the call, and best of luck. So, Rayo, we can close the call.
Sure. Thank you very much. On behalf of Antique Stock Broking Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
Thank you.
Thank you. Thank you.